for quite some time. He is a financial advisor, a tax expert, and an all-around good guy.
Thanks, Betsy.
All right, take it, Bob.
Thank you, Betsy. Marty Fogarty from the Heartland Law Firm and I were kind of trying to put together an agenda for this meeting, and I'm a tax guy, financial guy, so I'm kind of focused on the CARES Act and what's going on with that legislation and PPP loans. Marty had some fascinating thoughts on business in general and how do we survive this economic shutdown and what do we do to come out of this shutdown. So it was kind of decided that Marty would run a separate Zoom meeting in the coming weeks. So, but Marty, obviously, if there's anything you'd like to chime in on, please feel free to do so. I am going to focus on the CARES Act. We are now 1 month and 1 day into this legislation. And the biggest piece of this is these PPP loans. So I'm going to put a lot of my attention on that, covering that issue. If you have any questions, please, I'd like to make this as relevant to each of your individual situations as possible. So if you have a specific question about your business or you're confused about how to get the loan, how to handle forgiveness, what's included, please put a question in the chat and Megan will feed those to me. So I'm just going to get started on PPP loans. We are now into round 2. Round 1 was exhausted. Round 2 started yesterday morning at 9:30. If you want to get a PPP loan and you haven't talked to your banker, you need to do so today. If you haven't filled out an application and given it to your banker, you need to do so today. If you haven't talked to your banker in the last 24 hours, you should probably give them a call. These funds are probably going to be exhausted in the next number of days. I read something this morning said they'll be exhausted by the end of the week. So if this is something that you think would be beneficial to you, then you need to take action today if you haven't taken action already. And I recommend you contacting your banker to see where you're at in the process. I wanted to spend a good chunk of this time on PPP loan forgiveness. I'm guessing that many on the call have either applied for or received PPP loan funds. The process of determining how much you're entitled to get on a PPP loan was complicated. The process in calculating how to have that loan forgiven is dramatically more complicated. The quick summary of what can be forgiven is that over the next 8 weeks or after the 8 weeks from the date you received your funds and how you spend that money will determine how much of the loan is forgiven. The basic scenario is that you need to be using that money for payroll. If you don't use it for sufficient amounts of payroll and a little bit in other expenses, then you have to pay it back to the government. So you're basically either giving this money to your employees or you're repaying the loan to the government. That loan is going to be repaid over the next 2 years. It will accrue interest at only 1%, so it's inexpensive financing. We've had lots of questions from our client base about how does this thing get forgiven and what should I do? We have a large restaurant client who is shut down. They received PPP funds, but they have no payroll. So do they hire their employees back? Do they find something for them to do? Do they create a carryout business? These are all excellent questions that they need to sort out to determine if it makes more sense to hire back employees with little to do or just leave them on the unemployment rolls. The issue we're seeing in a lot of cases is that employees are making more money from unemployment than they are if an employer hired them back. So it's difficult to get somebody to come back at less than what they're getting for unemployment, just so that you can get some of your PPP loan forgiven. We had another restaurant client who's doing curbside carryout. They have a number of employees on payroll, but not fully staffed. Do they add hours to the ones they have? Do they bring others back? These are all questions that each individual business needs to sort out between themselves and their financial advisors and their accountants to determine what is the best approach to hiring people back, expanding hours, or increasing compensation. I'm going to get a little bit into the process of forgiveness, but the most important piece is create a tracking mechanism. You should have a set of accounting records, a general ledger, bank statements that are reconciled on a monthly basis. If you have all that, then you have the recipe for getting the information to your banker to get this loan forgiven. I personally, I have a PPP loan for my business. I set up a spreadsheet. I created 8 columns across the top, week number 1 through week number 8. And down the left-hand side, I listed all my employees. I listed health insurance. I listed retirement benefits, rent, mortgage, interest, and utilities. Those are all the expenses that will determine how much your loan is forgiven. And you need to map this thing out now. You shouldn't wait till after the 8 weeks are over. I found that in doing that I might not get my loan fully forgiven. There might need to be some tweaks to things like retirement contributions. This is probably a very good time to think about accelerating retirement contributions to a 401k plan or whatever kind of plan you might have with your business, if you have the cash and the wherewithal to do so. Given where the market's at, it's probably not a bad time to put some money into investments. And by putting some money in now, it might enhance your ability or increase the amount of the loan that is forgiven. The items of forgiveness are gross payroll, health insurance, retirement benefits, state and local taxes, which in Illinois is basically the unemployment tax, mortgage interest, rent, and utilities. The payroll, health, and retirement is 75% of the amount forgiven. The other items cannot exceed 25% of the total amount forgiven. Some of the problems that we're seeing with this, this legislation is only a month old. As experts are digging into this thing and deciphering the 500 pages of this CARES Act, they are finding situations that haven't been fully addressed and considered. There's a wonderful article by a tax expert, a law partner in a firm in Colorado. His name is Tony Nitti, N-I-T-T-I, talking about the things that we don't know about forgiveness and the things that aren't fully covered in the law. Some of those things are during this 8-week period. Are the payments made considered on the cash basis or the accrual basis? So in other words, if I got my loan on April 15th and on April 16th, I wrote payroll checks for the first 2 weeks of April, well, because the payroll period's outside the 8-week period, is that included or not? We believe cash basis is the right process, that whatever you pay during the 8-week period will be considered for forgiveness, but that is not fully sorted out yet. One of the other things that we're not fully sure of is we know for sure that if part of your loan is forgiven, it will not be taxable income. The thing we don't know is if expenses paid with those funds will be tax deductible. So tax forgiveness on the forgiven amount is great, but we're not certain if the money used to pay expenses from those funds will be tax deductible. We believe it will be, but there's not clarity on that issue. One of the other big items in determining forgiveness is employee count, determining full-time equivalents. If your employee count declines over the 8-week period, you might not get any of the loan forgiven. It's an extremely complicated calculation. It involves determining average employee counts during the 8-week period, looking back to employee counts last year at the start of this year, and possible restoration if you can get your employees back on board by June 30th. I'm not going to go into all the details unless somebody on the call really wants me to talk about those details. But nonetheless, it's not a simple calculation and something you need to consider in figuring out how much will get forgiven. So the biggest step in this forgiveness process is pre-planning planning today or shortly after you get your funds to make sure that the full amount can be forgiven, or what steps you might need to take to get it forgiven. The process in forgiveness is you'll go back to your lender and fill out a form that I've not seen from any lender yet that will ask for lots of information about how much payroll did you pay, these various other expenses, rent, mortgage, interest, utilities, and providing documentation to support those expenses. And then the lender will submit that to the SBA, and the SBA will determine if the loan is to be forgiven. I would think that this thing is going to lean towards forgiveness as opposed to non-forgiveness, because I don't think the banks want 1% loans on their balance sheet. But that is all something that we don't have answers to yet. Megan, I've covered a lot of ground on this PPP thing. Do we have any questions from the audience that I can specifically address some issues?
We do. So it sounds like people definitely want more details. If you could provide a little bit more details. And then we have some specific questions. A few people have answered that they have received funding. Betsy posed a question at the beginning. If you did receive funding, we definitely want to know. And if you could post that yes or no in the chat. A question about Whiskey River is asking, can you add new employees to PPP, or do they have to be existing employees?
You can definitely add new employees. There's no requirement that says the employees you used to have must be the ones that you still have. So let me go into a little bit more detail on this calculation of what is forgiven from the loan. So let's say on April 15th, you received $100,000 in a PPP loan. So your 8-week period starts the date you receive the money. So on April 15th, you have until June 15th, or whatever 8 weeks is from April 15th, I'm going to say it's June 15th, to track how that $100,000 is expended. Now, we've also seen gotten some questions from clients saying, do I need separate bank accounts? Do I need to set up separate general ledger accounts for tracking these expenses? That is not, we don't believe that's necessary. We've heard some banks saying that they would like you to put the money into separate bank accounts. But it's, according to the CARES Act, you just need to substantiate how the money was spent. So over these 8 weeks from the date you receive funding, you can get forgiveness based on the amount of payroll, the gross payroll, over that 8-week period. So whenever, if you write payroll checks every other week, every week, once a month, whatever payroll checks are written during that 8-week period will get added up, and the gross amount of that payroll will be used in making this forgiveness calculation. In addition to payroll, you can also add in health insurance that you've paid for your employees. You can also add in retirement contributions. If you have a simple plan, a 401k plan, whatever kind of corporate retirement plan you might have, you can add that in. But these payments must be made during this 8-week period. You can't accrue, for instance, simple plan contributions or 401k contributions and say, I'm going to pay those next January. They have to be paid during the 8-week period. In addition, so let's say we've got a $100,000 PPP loan, and we go through and we add up during these 8 weeks, we think we're going to write $60,000 in payroll checks. Now that can include payroll checks to yourself, the employer, as well as to your staff. It cannot include amounts in excess of $100,000 on an annual basis. So over this 8-week period, if you pay an employee more than $15,000 during that 8-week period, that would be annualized and be determined to be in excess of $100,000. So you can't just write yourself a bonus check for $50,000 to make up a shortfall. So whatever is paid to each person over this 8-week period will be annualized to determine if anyone's over the $100,000 annual limit. You can get up to the $100,000 annual limit. But that would be then divided by 52 weeks times 8 weeks, and that works out to something like $15,300 something. So you have to make sure that you're not, well, you can pay somebody more than that, but that won't enter into the forgiveness calculation. So let's say I've got a $100,000 PPP loan. I've got $60,000 I'm going to write in payroll checks that would include health insurance and retirement benefits. Well, 60,000, I can add in another 25% for other expenses. Those other expenses being mortgage, interest, rent, and utilities. So I could have another $20,000 if I paid rent on my office. Self-rental's okay. I'm sitting in my office condo that I own. I own it in a separate entity, and I write myself a rent check from my business to my rental or to my building LLC. So you can pay yourself rent, that's allowed. But again, you're going to be subject to this cap of 25% of the total forgiveness. You can write utilities, electric, water, gas, internet, telephone, whatever the various costs are of maintaining your property, of keeping your office open for business. So that could be, in my example, if I had 60,000 in payroll, I could have 20,000 in other expenses, for a total of 80,000 forgiven. And I would then supply that information to my banker at the end of the 8-week period, and I would get that 80,000 of my 100,000 debt removed. I would not have to pay income tax on that 80,000. Again, we're not sure if those expenses I'm paying with the 80,000 are deductible. We believe them to be, but we're looking for more information from the SBA. That balance that is not forgiven, the 20,000, is now a government loan. You have 2 years in total to pay it back. The 2-year period starts the day you get the money. So on February 15th, the 2-year loan period is beginning. The first 6 months are deferred. You don't need to make any payments for 6 months, but the 1% interest is accruing on that loan. So beginning 6 months from the date of the loan, you would then have to start making payments, and over the next 18 months from that date, that loan would have to get paid off. When calculating that forgiveness number, so let's go back to my example, $100,000 loan, I've got 80,000 in expenses. However, I used to have 8 employees last year, and now I only have 6. Well, that quotient, that fraction will, of 6 divided by 8, will now reduce my 80,000 in forgiveness. So now I'm only going to get 60,000 forgiven, not 80, because my employee count is down. I can restore that employee count by June 30th, and I will then get the full forgiveness amount. But the forgiveness amount is based on payroll and the other allowed expenses to their maximum. And you cannot get full forgiveness just by hiring back all your employees on June 30th. That's not going to work. Megan, does that kind of, do we have, if anybody's got, hey, this is tax law. I could talk about this all day, folks. I don't know that you want to sit here all day and listen to me talk about tax law. But nonetheless, I want to make sure that your questions are addressed. Megan, do you see something else that?
I do, and I don't think you covered this. How are full-time equivalents calculated? It sounds like this is from the Wilmette Theater, and they have mostly part-time employees.
That's a great question. We don't know. It does not say in the Act how to calculate a full-time equivalent. There is a reference in the Act to that goes back to Obamacare health law that said a full-time equivalent is somebody who works 30 hours or more. I've seen that in some other tax experts' documentation that talks about a 30-hour week as being a full-time employee. So right now, my best recommendation is to use that number. So if somebody's working 15 hours a week, they are 0.5 of a full-time equivalent, and use that 30-hour number as the target. If we get, hopefully we'll get some more guidance from the SBA over the next 8 weeks. But right now, that's the best I can provide you with, is using 30 hours a week as the denominator and then put in for each employee how many hours they work per week to come up with your FTE per week. And then you have to average that over this 8-week period.
Okay, thank you. Next question from Charmaine at Always Best Care. Do you count pay periods or payroll check dates?
Hi, Charmaine. You count pay periods. So if you pay every 2 weeks, then you would, over that 8-week period, you'd have 4 pay periods, and you would take the number of full-time equivalents in each pay period and divide it by 4. We don't have specific language that walks us through this FTE calculation process. So as long as we use something right now, my best advice and recommendation is, as long as we use something reasonable that we can document and show to our lender that here's how we calculated the number, that I believe you're going to be okay. If it works out better to go week by week, then do that. I mean, we're in a situation where we can kind of pick and choose a little bit to determine which calculation method is going to provide us with the best answer, which is most forgiveness. But I got to believe, you know, if you go every other week or week by week, you're probably going to end up with pretty darn close to the same answer.
Lucky for me, you're my accountant.
So you don't have to worry about it, Charmaine. I'll calculate it for you.
Thanks, Bob.
You can get off the call then. It sounds like you don't have to worry about anything.
I'm surprised to see Charmaine on the call. I figured she'd just call me up or Kyla and say, what do I do? I'm glad you're on the call.
I've done that. Thank you.
So the
Sure.
next question is from Keith at Apricot Lane. He's saying that they had fewer full-time employees as of January 1st than last year's average. So even if they hired back all the full-time employees, do they still wouldn't meet that criteria? Does that mean nothing will be forgiven? He's asking.
Let me give you, I'm going to give you the specifics of the calculation. I'm going to go through it quickly. What I would recommend, and I can send this over to Megan and you can get it from her, or Megan, maybe you can send it out to the folks. This article written by Tony Nitti, who is one of the top 3, in my humble opinion, one of the top 3 tax experts in the country, at least one that writes a lot, so we can understand what he's thinking about. And it goes through these calculations with lots of examples. So Keith, that might help you. What you need to do is you need to calculate a bunch of numbers. You need to calculate the FTEs during the 8-week period, during the time from when you receive the funds until the 8 weeks is up. You then need to go back and calculate the average FTEs from the period February 15th of 2019 to June 30th of 2019. You then need to calculate the FTEs from January 1st of 2020 to February 29th of 2020. You take the smaller of those 2 numbers and you divide the FTEs during the 8 weeks by the smaller of those 2 numbers to arrive at your fraction, which is then multiplied by the forgiveness amount, which is payroll plus 25% of the other expenses. That's your starting point for saying how much can be forgiven. Then you look at the number of FTEs you had on February the 15th of this year and compare that to the average number of FTEs you had from February 15th to April 27th of this year. And if the February 15th number is less than the average from February 15th to April 27th, that's how many employees you need to restore by June 30th to retain your full forgiveness. If you restore half so let's say that you've come up with, 80% is my fraction. My employee count is down. I've got 80,000 in forgiveness, but I've only got 80% in my number of employees now versus the number of employees I had last year. So now instead of getting 80,000 forgiven, you get 64,000 forgiven. But if you restore employee count to what it was on February the 15th by June 30th, then you should get that full 80,000 forgiven. If you only restore half that, I don't know what happens. I'm guessing that half of the lost forgiveness amount will be restored. Again, we're looking to the SBA for more clarity on this issue. But those are the dates that you need to use to make your FTE calculations to figure out how many staff needs to be added back in for me to get full forgiveness, or if I don't add them back in, how much does that cost me in forgiveness? Megan, I'll send you that article, or, Kyla, you're on the call somewhere. Can you send that? Yeah. Can you email that to Megan, and Megan, if you would send it out to all those who want it or those on the call.
Nice, sounds good. We're also recording this, and we can share that with your permission, Bob.
So I can watch this every night. That's a great idea.
We're gonna put it on YouTube, and I think you're gonna get 1 million followers.
I can hardly wait.
Yep.
So the dates are in the dates are in the CARES Act. You can look them up in there if you want to go straight from the horse's mouth. These dates, but I think it's about a 10, 12 page memo written for tax people to sort through this stuff. So the language can be a little difficult to get through, but Keith, I think you might find some of the examples helpful and interesting in there, and it provides all the dates in there in a little easier to read format than trying to go to the CARES Act itself and read the tax legislation.
Keith, did that answer your question? I know you had a couple additional questions. Do you want to unmute yourself?
Yeah, no, that was good. He kind of got into it even before, so thank you. I guess just so that you said there's a 10-page thing, that's a supplement where to the CARES Act on the Treasury's website with the dates?
It's an article. No, the what I'm referring to is just an article written by a tax professional.
All right, the Forbes article?
Correct, the Forbes article.
Okay, thank you.
Addressing that. So it's just a boiled down, easier version to read than trying to go to the legislation itself. So I would recommend that you start there as a resource to get more deeply into the calculations of these things. And if anybody has questions after we get through this call today, please email them into Megan. She can forward them on to me, or Megan, if you want to give everybody my email address. My staff on the call are probably shaking their heads at me right now, but go ahead and send them in. I'll do what I can to respond or provide you with resources to go to find answers to those questions. This is, as I said, this is a process that I know how we struggle and our clients struggle to get the loan. Getting the loan forgiven is going to be a more difficult task. So there's a lot of language to get through. Megan?
Thanks, Bob. So the next question is from Image Specialties. Do the checks have to be written within the 8-week period?
Our understanding is yes. When you say the checks, I assume you mean payroll checks or rent checks or utility checks or health insurance payments. Yes, they must be payments made during the 8-week period that begins on the day you receive your funds and ends 8 weeks after that date. So our recommendation is that you make those payments in that 8-week window, and kind of map out as you're planning cash flow. When are you going to make payments? How am I going to make these payments? And if something's going to fall just outside the 8-week window, accelerate it. If you're still waiting to get your PPP funds and you hope to receive them any day, you might want to defer making some payments until you actually get the money.
Okay, so the next question is from Maria at Hlavacek. I believe you covered this, but if you can answer it again. Can you pay the utilities and the rent from when they could no longer pay? I don't know if I actually understand that question.
Maria, you want to unmute and ask? I'm not sure I understand.
No, you answered what I wanted to know. It's like, okay, so this month I couldn't pay rent because we've been closed for 5 weeks.
Right.
So I'll just pay it whenever I get the money, if I get the money, God only knows. And that would be okay because I'm paying it during that 8 weeks.
Our understanding of the legislation is that so long as the rental agreement was in place as of February the 15th of this year, so long as the utilities were for a facility that was in place by February 15th of this year, then those payments can be made within the 8-week window. I've seen nothing that says prepayments or structuring when the payments are made will impact the ability to use them for forgiveness. Now, for things like rent and utilities, there's a limit as to how much you can include. You can't. So, for instance, if you are a restaurant that is totally shut down and you have no employees, you will get no forgiveness. You can't say, I'm going to pay a bunch of rent and utilities, and then I'll get forgiveness. If there is no payroll, there is no forgiveness.
But as long as you're paying your payroll from the next 8 weeks on, you're okay.
Payroll checks written in the 8-week window.
Yeah. Okay.
Then you're okay.
Yeah, because we're coming back on Monday, so.
I'm glad to hear that. That's great news.
Me too.
Thanks, Maria. Okay, the next question is from Speed Pro. John Phelan wants to know, does the gross amount of payroll include the employer's share of payroll taxes?
John, no, it doesn't. So if I'm paying somebody $1,000 for the last 2 weeks' work, I'm also have to pay 6.2% FICA, 1.45% Medicare. Those taxes are not included as part of this calculation. The only tax that is allowed to be included in the calculation is state and local taxes, which for Illinois is the Illinois unemployment. So since if you've had your employees on payroll the entire year, you've probably already paid most of it, or you might be over the cap on the state unemployment limits. So you cannot include the employer's share of federal taxes as part of the payroll calculation. It is just the gross payroll amount. It is not the net payroll amount. So the employee will also have those taxes deducted from their pay, as well as federal and state income taxes. So if a person makes $1,000, they might only get a check for $700. The amount that's allowed is $1,000, the gross payroll, not the net payroll, and not the employer's share of the federal taxes.
Okay, next, Image Specialties has another question. At the end of the 8 weeks, for the forgiveness period is June 12th, but we cut checks for payroll on June 13th. Would the amount for payroll for the prior week be covered, or would they have to cut the checks early?
My understanding on the way it's written today, and making an assumption that it's the cash basis that will apply to this, which I believe is a valid assumption, you would have to write the payroll on June 12th and not on June 13th. That it is not when the expense is incurred, it's when the payment is made. There is language in the law that's a little bit contradictory that says it says expenses incurred and payments made. We don't believe that they mean the expense must be incurred and the payment made in the 8-week period, because then you could only include about 6 weeks of payroll. We believe that they mean that the payments are made in the 8-week period. So John, in that case, if you are going to do a payroll on June 13th and your 8 weeks ends on June 12th, I recommend that you accelerate your payroll to June 12th. And that would be acceptable.
Okay, next question is from Brian O'Grady at O'Grady Law Group. Brian, if you want to unmute yourself and add something to it, but I'll read the question. He has 2 questions. Is there any reason that payroll must stay the same as before or after this 8-week period? Could someone double their payroll for 8 weeks and then reduce it for the following 8 weeks? That's one part. And then the second part of the question is, can you increase the payroll count, hire someone new, and they have to stay for the rest of the year?
Can I elect to refuse a question from Brian O'Grady, Megan?
Yeah, I mean, that's totally fine.
Since you are my corporate accountant, I just didn't want you to have to repeat yourself. So I figured I'd ask it now.
So, yeah, I'm doing good, Brian. Thanks. Thanks for the question. Yes, you can increase compensation. Now, the issue might be, let's say somebody's making $3,000 every 2 weeks. So at the end of 8 weeks, they would make $12,000 in total gross payroll during that 8-week period. So that would be fine. But if you double their compensation to $24,000 during that 8-week period, if you analyze $24,000, annualize $24,000, that's over 100. So there's going to be a cap. the $100,000 annualized payroll limit will be basically anybody you, during that 8-week period, pay more than roughly $15,000 to. That extra payroll will not be included in the calculation. The second part, I think, was, can you add people? Sure. It doesn't make your forgiveness bigger. So if I had, 6 people last year working for me, now I have 9. It's not going to help my forgiveness. I mean, my forgiveness will be 100%, but it won't give me 150% of forgiveness. Is that the question, Brian?
Yeah, I think so. Just on the adding of people, I guess, is the big question and the end there. But
And the faces on the team now don't have to be the same faces that were there a year ago. You
Okay.
don't have to have the same people. Now there are restrictions going the other way. If somebody was making $3,000 a week and you cut them to $1,500 a week, well, that if you have a reduction of over 25% on somebody's compensation, that's going to negatively impact your forgiveness. So reducing payroll, even though so let's say you had 8 people last year, you got 8 people this year, but you cut everybody down by 50%. Well, your count's okay, but your compensation level has been reduced by more than 25%. So you're going to have a forgiveness adjustment.
okay. Just follow-up question, and while I have you, you had mentioned 25% can be rent and utility payments. That's 25% of your allowed payroll, not 25% of your loan.
25% of the amount forgiven.
Okay.
So it's neither one of those things you said.
Yeah, correct. Yeah.
25% of the amount forgiven.
Okay.
Right. So if you want to get $100,000 forgiven,
yeah.
right. If you got a $100,000 loan and you want to get it all forgiven, you have to have at least $75,000 in payroll, health insurance, and retirement benefits.
Awesome.
The balance can be rent, utilities, and mortgage interest.
Can I jump in with a question to what Bob just said, where you were talking about the reduction of amount paid during that period to what they made before?
Mm-hmm.
Is that based on what if they work fewer hours? If some of us deal with part-time people who they're making the same hourly rate, but they work fewer hours, so would that be considered a reduction in pay?
I mean, there are special case scenarios for seasonal employees, Keith, where somebody might,
Yeah, but not seasonal, just a truly hourly, if we have part-time working towards our full-time equivalents.
I mean, I'm not sure, Keith, the specific answer to that. And I think the problem is that the specific answer is not addressed anywhere, not in the legislation anyways. So I think it's something to be considered and looked at for you to probably work out where you at and how much have you paid people and how much are you paying them now. If it's only a 10% decline, then it's not a big deal. If it's more than 25%, then I think you have some additional questions to ask and to look at, will this impact your forgiveness amount?
Got it. Thank you.
Sure.
One last follow-up question I think would benefit everybody. When we're talking about utilities and how we calculate them, obviously telephone would be a utility. I'm sure many people lease equipment or a variety of office equipment. Would that, if it falls into a utility category, say a rental phone, if you're leasing a phone system as an example, do we feel that would be a utility or no?
I feel like I'm a broken record here. We don't know, Brian.
Yeah.
There is no definition in the law for utilities. The comments that I've seen from various tax experts say, certainly, the payment of electricity, gas, water, disposal, that kind of stuff certainly is. I've seen telephone and internet, the usage costs as being deductible. I think they're going to probably draw the line at paying rent on an iPhone or paying rent on some other type of equipment. If you have a loan for a piece of equipment, you might be able to deduct the interest on that loan, calling it mortgage interest. Again, we're unclear as to exactly what they mean by mortgage interest. It clearly applies to interest if you own a building that you're working your property from, your business from, and you've got mortgage, that interest is certainly allowed. But if you're using for your car for business, the interest on that loan, I don't know if you're going to get that or not. I don't know that's going to move the needle very far if you look at it just 2 months of payments. But again, hopefully we'll get a little more guidance and specifics. But I think for sure utilities would be gas, electric, water disposal, phone, and internet. Beyond that, you'd have to probably make a case with your lender.
Awesome. Hey, thanks for trying to interpret what's obviously very fluid. We appreciate it.
As a lawyer, you understand trying to interpret legal text.
Exactly. All right.
Megan, anything else?
We do have a few more.
Go for it.
Okay. Aesthetica Hair Design, it sounds like maybe they don't have the loan yet. They're saying if we get the loan and they're not allowed to open the business, how and when do they start using the PPP loan?
So the PPP loan is supposed to be used for payroll and these other expenses that are allowed. It's supposed to be given to people that are experiencing an economic impact due to the coronavirus pandemic. Certainly, if your business is closed, you're experiencing an economic impact. And you're doing what you can to reopen your business, but you may not get it reopened in the 8-week period. You may not have any payroll during that 8-week period. It means that your loan is not forgiven and that you owe that money back to your bank. And again, the loan repayment is based on 2 years, starting from the date you get your money. The first 6 months payments are deferred, and then you will be making 18 payments at the end of that 6-month period until that loan is paid off.
Thanks, Bob. Next question is from Luanne of Dairy Bar. I know I'm wondering, my family's wondering if the Dairy Bar is going to be opening soon. She says she has a lot of part-time employees, and is it best to use fewer employees to give them more hours, or if you are using the regular amount of employees working fewer hours, how do you meet the full-time equivalence?
That's a good question, Luanne. And I think Laura Gabuzzi must be a relative of yours, and I was her softball coach many, many years ago. Tell Laura I said hello. With Dairy Bar, that's clearly a seasonal business. So there are special calculations that are going to be involved in determining full-time equivalents for last year, full-time equivalents for this year. Again, it's going to be, if you have 2 employees that are working half-time or 1 employee working full-time, that's the same number when it comes to full-time equivalents. The payroll dollars will probably be the same if you have 2 people versus 1. So off the top of my head, Luanne, I don't know that there's a big difference there. Should I hire lots of half-time people or a smaller number of full-time people? I'd have to crunch the numbers and look at it to say, would there be a difference? And that's really what I think you need to do, is crunch the numbers and say, how much payroll would I pay under this scenario? And would it be different if I had, half-time people? But then how does that affect my full-time equivalents? This forgiveness issue is a big exercise in pre-planning how you're going to maximize the amount that can be forgiven. You can't wait for the 8-week period to be over, because as Luanne, as you just described, you have to make decisions today on how to run your business. And you can't wait until the 8-week period is over and go, gosh, I wish I'd have done it differently. I'm sorry, the 8-week period is over. Those payments are made. So you have to plan for it ahead of time and schedule out those kinds of things now so that you can maximize that forgiveness. And I recommend Dairy Bar open on, how about next Monday? Weather should be nice enough.
That sounds good. Thanks, Bob. Okay, the next question is from Kelly Smith. I'm not sure what company she's with. If someone voluntarily resigned, would you have to replace them in order to have the same number of employees for loan forgiveness?
I believe the answer is yes. The full-time equivalent calculation is going to be based on headcount during that 8-week period, and then comparing it to the periods from a year ago and from the other time periods I mentioned previous. So even though somebody is gone, I don't think you can hang your hat on the fact that I wanted to keep them, but they left anyways. You would have to replace them with somebody else to maintain your full-time, your FTE counts. I've seen nothing that indicates to me that if it only hinges upon the fact that the employer fires you, it's not impacted by an employee just walking away. It's whatever that FTE number is, regardless of how they got there or why they left.
Thanks, Bob. Next question is from Pat Rubino of Colonial Dental. Can the last payment be partial payroll? So each individual employee does not need to be 75% of their salary that they would normally be making over a 2-week period. the payroll amount should be in full. Is that correct?
There's specific calculations, Pat, as to the payroll dollars, the 25% number. Off the top of my head, I don't have a good answer for you. I think, again, it's just going back to the text and looking at how the calculation for that 25% is determined. The information, I believe, is in that Tony Nitti article I referenced when I was talking some of Keith's questions before. I would recommend that as a good starting point to determine what makes the most sense for you guys in your practice. And if you have other questions on it, shoot me an email and I can find you some additional resources to assist with that. But it's basically, it's pretty mechanical in the way that the numbers are calculated. There's not a lot of, well, yeah, but this person left of their own accord. I mean, that kind of stuff isn't part of this calculation. It's pretty much what are the numbers and what does the math say. But you can manipulate that a little bit. As I was answering a different question, I think from John, about, if the payroll date's June 13th, but my period ends on June 12th, well, yeah, accelerate the payroll date. Increase somebody's payroll for a week so that they, give them some bonus pay or vacation pay or something, so that you meet your numbers. But all that should be done ahead of time. You should set up your spreadsheets and work through that process, or whoever helps you with accounting and that kind of stuff, to figure this stuff out now, so you don't end up with a nasty surprise when you fill out your application for your lender.
Okay, great. So as far as the date is concerned, normally our payroll would end on June 15th, which is after the date. So we want to accelerate the hours for our money runs out June 12th. So we want to accelerate the hours and put extra hours in for all those employees and cut the check on June 12th.
I believe, based on everything I've seen, that would be permitted.
Okay, thank you.
Okay, just a couple more questions. It sounds like John from Speed Pro has another question. Any input on the IDL, IDE, I can't say
EIDL.
that. Thank you. The loan program.
I don't have a lot to share with you on that program, John. I've not been really following it very closely. It is another SBA program. It is another resource that you can utilize. It does come with an upfront $10,000 potential grant. That grant, I believe, is now adjusted. It's not $10,000 flat. It's $1,000 per employee. So you might, if you only have a small office, you might get less than 10 as a prepayment towards that EIDL loan. The EIDL loan you could do a much longer term. The interest rate is higher. There's personal collateral involved. It's a very different process. But really, other than some generic information, John, I don't have a whole lot to share with you on that. I've basically spent the last 4 weeks trying to understand what a PPP loan is and how to get it forgiven. And I haven't really seen a lot. I think, when looking at my clients' situations, the PPP loan in virtually every case made more sense than the EIDL did. The EIDL is, and obviously PPP for the forgiveness aspect. It's money that you can use to pay your employees. If you don't use it to pay your employees, you give it back to the government, but it's inexpensive financing for the next 2 years. So the PPP has so many positives versus the EIDL that I don't believe we have any clients that have actually applied for an EIDL. And I don't have a whole lot to share with you on specifics for that, John.
Thanks, Bob. Next question is from Karen Patterson. Are office condo assessments part of rent?
I would say yes, Karen. I'm going to include it in mine.
Good enough.
Don't make it right, but I'll include it in mine. So I think the answer is yes. But again, the law is written in such, another question from a lawyer. I like how lawyers ask me legal questions. I can't, I'll send you the text, Karen, and you can try to decipher it. It doesn't say, it doesn't specifically say if that's included, but it sure sounds like rent or utilities. I mean, I would think it falls into that, into those categories. I think we're going to see a lot more once the banks get through issuing PPP loans, and we start getting some forms from them to say, here's what you need to provide us to get your loan forgiven. And I got to believe that it's going to be generous on the forgiveness side, because banks don't want to carry 1% loans on their books. There's no benefit, I don't think, to the bank to keeping this loan on their books.
I'm going to say
and
that it sounds like it's going to be very interpretational per bank. Sorry to
Yes.
interrupt you, but
Yes, and I've seen crazy stories from bankers that don't really fully understand the language, and it's going to be on a case-by-case, bank-by-bank basis. When we've seen that during round one of the PPP loans, some banks were ready to go, others, it took them a week to get ready to go. Some got through quickly, others didn't get through at all. So yes, it's going to be case-by-case. You're going to need to work with your banker. Your banker needs to be your best friend right now. Unfortunately, we can't take them out for lunch or dinner. But when this is over, we probably should. They're working very hard to try to get this thing done and figure this out. But yes, that's ultimately going to be the arbiter as your banker.
Okay, just a couple more questions before we wrap up. Gary from SCORE is asking if the PPP is payroll protection, can you pay the employee without having them do the actual work?
I've heard that discussed, Gary. I believe that is allowed. If the employee is paid for being available to do work. Yeah, I think the issue you run into is that employee could probably make more collecting unemployment with the extra federal kicker to the unemployment system than whatever you might pay them. So that's the issue that you're dealing with is, do I want to, I mean, the employer is going to pay back the loan one way or the other. They either give the money to the employee or they give it to the government. If the employee can make more money on the unemployment system, then why should I pay the employee? I'll just give the money back to the government when repayment comes up. But I've seen that addressed. I mean, that is something to consider. I just don't know how in the long run that you're better off. I've heard people, I've talked to clients about the intangibles of goodwill with an employee base to keep them on when there's little or nothing for them to do. And that, is something that you need to look at and consider.
Thanks. I hope he got that. It looks like he's on another call right now. But last question is from Keith at Apricot Lane. Question from earlier about using the PPP loan. If we aren't worried about forgiveness, can we spend the loan amounts on non-approved uses, buying inventory or other expenses, and then just treat it as a normal 2-year loan?
There actually was language issued by the SBA I think it was this week or maybe the end of last week. We've seen lots of stories about large corporations like Potbelly and Ruth's Chris and some of these places that took, that received maximum loans, and now they're giving the money back. The notification that I saw from the SBA said that if you have access to other resources, if you have other funds available, if you have excess cash reserves, if you have access to the public markets, and you have other sources of money, and you got a PPP loan, that you should pay it back, that you have until May 7th to pay it back, and we won't come after you and try to fine you for filling out an unverifiable application. On the application, it says you certify certain things like I've been economically impacted by the coronavirus pandemic. I have economic impact as a result of the shelter-in-place orders and these other things that we're now dealing with. I think as long as your intention is to pay payroll, as long as your intention was to reopen. I mean, if the governor says you can't reopen your restaurant business, I know you're not a restaurant, but in that extreme example, if you can't open your restaurant until June 1st, most of the 8-week, if not all the 8-week period is gone. So how can I pay payroll if I can't have my restaurant open? But your intentions were good. That's what you planned on doing. So I believe you can use it as a source of funds. You do not need to segregate the money you receive on the PPP loan in separate bank accounts and pay payroll or other expenses from that bank account. That is not a requirement of the Act. You can commingle the funds. The only requirement is that you verify and document your request for forgiveness. So I don't think it's an issue, Keith, if your intention is to reopen your business as soon as you can. Your intention is to have employees back on staff and pay them with payroll. If it turns out that you don't get there fully or that the forgiveness is disallowed, because of some of these various calculations, I think you're still fine using it as a source of funds to be repaid according to the 2-year schedule.
I think that's all the questions. This was really informative. We're going to be sending out all the links and the articles to everyone that was registered for this call today. We're also recording this call.
But wait, Megan, I've got 2 more hours of tax law that I wanted to talk about.
Okay, we'll extend the time.
That's
No
it's not
problem.
funny. I've got all these notes that we didn't even
Trisha's
talk
gonna
about
stay on
yet.
the call, Bob. Trisha's staying on the call, not to worry.
There is, let me just say, there is lots of meat to this CARES Act besides the PPP loans. There's the economic impact payments, the $1,200 refunds that we're all hoping to get someday. There is there's something called a employee retention credit if you don't get a PPP loan. That's something that you can use to get a credit against payroll taxes. If you do get a PPP loan, then you can't use the employee retention credit. There, you can defer payments of your share of payroll taxes. As John was asking about, what about federal taxes, FICA and Medicare that I have to pay on my employees, my share? No, you can't use that. But if you don't get a PPP loan forgiven, you can defer payment of those taxes until the end of 21 and the end of 22. So there's other pieces in this law that you might go to for assistance. Retirement accounts. If you have an IRA account with a bunch of money in it, you can take out $100,000. There's no 10% early withdrawal penalty if you're under 59 and a half, and you have 3 years to put it back. So there are other things in this law that if you're strapped for cash or other credits and tax things that might help you, you should look into that as well. Okay, Megan, I'm done.
Thank you so much. This was wonderful. We really appreciate your time.
Now, just before we hang up, Marty, are you still on there? I don't
No,
see.
he had to jump off early.
Okay, PJ, are you on?
I don't think she is.
Okay, never mind. I was going to ask them if they picked a date for their session, but we will let everybody know. Bob, thank you so much, and thank you for allowing people to do follow-up questions via Megan. This was great, very informative, and I am delighted to see all your faces. Blessed that you are part of the chamber, and we appreciate you tremendously. If there's anything we can do, remember, get that survey completed when it comes out, and thank you. You're great. We'll talk to you all soon.
Thank you all.
Bye. Jazz hands.